S&P Global stock, it is down 21% year to date at a current stock price of $401. Now, a few reasons why this is because they miss on their earnings and they have a weak guidance for the year of 2026. There's a lot of concerns about the growth of the company. This company was priced in as a growth stock. So since that has changed now and there's weaker guidance for 2026, I guess investors are getting scared. We're going to take a look at the history of the growth of the company as well. And of course, with everything in the market, there's fears about AI disruption. That's also something that's affecting the current stock. So this gets me interested to see if this stock could be potentially a good investment for our portfolios. Now, we're going to be taking a look at the intrinsic value for this stock. This isn't the actual intrinsic value we're going to be taking a look at. This is an average. We're going to take a look at a base case scenario, at a worst case scenario, and at a best case scenario for the stock. But as you can see on the average, which is this gray line here, the stock has been for most of the times overvalued or considered overvalued, which is this red line right here. And for the first time in a long time, the stock is finally below the line. So this either is getting a lot of people scared, or this is getting a lot of people like myself that I like to value invest very interested in the stock. Now we're going to take a look at a few metrics comparing the price to the stock and see if it makes sense to maybe even buy this company or not. Again, this is my own opinion, not financial advice. But when we take a look at the earnings per share, we can go ahead and see that since 2022, they have been increasing, and right now the price started dropping. And then if we take a look at the free cash flow for a share, you can go ahead and see that it is increasing as well, and the share price is dropping. A lot of stocks, especially huge companies like S&P Global, their stock price tends to follow the free cash flow after a short time or eventually. Obviously, it's not 100% the case, but it does happen most of the times. Now, if we take a look at the shares outstanding as well, we can go ahead and see that there's less and less shares of S&P Global in the market, meaning that for value investors, this is something good. That means your shares that you already own are worth a lot more. So since we're talking about investors, let's go ahead and see what Wall Street analysts are saying about this company. From a Wall Street rating of 1 through 5, it currently has a 4.68, which consists of 22 total analysts in the last 90 days that had 16 strong buys, 5 buys, 1 hold with 0 sells and 0 strong sells. If we go ahead and take a look at the price compared to the revenue, we can go ahead and see the revenue has been increasing over time. And this little blue line here has how we've been seeing is the price, which now has been dropping. And this is where I think some investors started to get scared. It's in September of 2025 when they reported this gross profit decline. The share price dropped, then we had a little bit of a bounce back, and then with the new 2026 week guidance, it started dropping down again. And then one last thing I want to take a look at is the price compared to the net income. As you can see, net income has been increasing, which is important in a company of this size, and now we're continuing to drop. So with the recent prices, if we compare the price to earning ratio compared to its peers, we can go ahead and see that the average is 28 PE, and S&P Global is currently at a 27. So I guess you're getting it below the average of the sector or its competitors. And if we take a look at the future growth of the company, especially in the annual earnings growth, we can see the company is going to be growing at about 10%, while the industry and the market are going to be growing at a 12 and 15%. So not so good for the company there. But if we take a look at the annual revenue growth, we can see that the company is going to be increasing by 6.4% compared to the industry at 5.7%. Of course, the market is still outperforming by 10.2%. Now, if we take a look at the overall financials, the annual financials for the company, we can go ahead and see, like we saw in the previous chart, that revenue is up 14%, operating income is up 26%, net income is still up, free cash flow is up 56%. I mean, these are the numbers of a company that I would like to own in my portfolio. Of course, we'll have to see now the intrinsic value, what it is at currently, and if it makes sense to invest in the company. And then if we take a look at more stuff like the gross margin and the net margin, we can go ahead and see that the percentages are very good. One thing I like to be higher is probably the return on capital employed. This basically is how much money each dollar the company makes. I would like to see something above the 10%. It gives me a good feeling when investing in a company, if I guess you could say that. But I would say perfect would be around 12, 15, 20% would be amazing. Of course, it's going to be different for each company. Now, this isn't the actual intrinsic value, again, that we're going to be looking now in a second, but this is what analysts forecast the stock that it can be worth. On a low end, it's going to be about $545. On an average price, it's going to be about $619. And then on a high forecast, it's going to be about $708. So if we take a look at the insider trading volume, we can go ahead and see for the past 9 to 12 months, people were selling shares. And now with the recent drops, because this company has been dropping for the past about 6 months, we can go ahead and see that some insiders have been buying a few shares, which is good to see when insiders are buying a company. Now this stock does pay a dividend, which is going to be about $3.84 per share. And if we take a look at their dividend growth, they've been growing their dividend for 52 years. So this is almost, I think, already a dividend aristocrat. They still have a 5-year growth rate of 7.46 with only a payout ratio of 21%, which that means the payout ratio or this percentage is not really affecting the company's free cash flow to pay out the dividends. And of course, as we just saw, the yield is 0.97, giving you a payout of 3.88. Now this right here I like. This here I like we saw the insiders buying. Now we see a buyback yield of 2.22%. That means management or the company itself is buying back the yield. They think the company is undervalued, so they're reinvesting back in the company. That means they believe in the company, which is good to see when management is doing this. And now it's time to see the intrinsic value, which I know is what you've all been waiting for. Yeah, guys, I can sing. Okay, so the base case scenario for this company is going to be that is worth $418. The worst case scenario is that right now it's overvalued by 15%, meaning the stock can still go down to $342. But the best case scenario for the stock, there's currently an undervaluation of 30%, giving it a stock price of $571. Do you think this will be a good investment? Do you think AI is going to completely disrupt this company? Do you believe the fear in the market of AI? Please let me know in the comments below. If you enjoyed the video, I would appreciate it very much if you could leave a like. Don't forget to subscribe. And as always, I'll see you in the next video.